What's your take, Don? The Fed do it right?
Yeah, I think Larry Lindsay has the correct analysis here. The Fed was not stepping in and buying distressed mortgage securities. It was just accepting mortgages as collateral for repos. When you just go to the New York Fed website and look at you can just see the history of all their open market operations. They do this every day. It was just a little bigger today. So the market wanted liquidity. The Fed gave the market liquidity. The market was willing to pay more than the existing Fed funds rate to do that. The Fed only stepped in order to defend that rate. So clearly that rate is not too high. If anything, it's too low. So the idea that this has any connection at all to the Fed making an emergency announcement next week about cutting the Fed funds rate, it's just simply not going to happen.
What do you do if they drop the funds rate?
Procedure.
What if you do? You come in Monday morning, they drop the funds rate 50 basis points. What do you do? How does that inform your stock market outlook? Would you be a buyer or a seller?
I think that would be a real mistake. I think that would indicate that the Fed is panicking, and there's no reason to panic. The mechanism is working just fine. It'd be a huge mistake. You know, when a central bank changes its target interest rate, it's kind of like a company setting a new dividend policy. It's kind of permanent. It's hard to change it back. It has to move gradually. So what that means is that they're committing to an economy-wide, long-lived change in interest rates, which is just going to fuel the long-term fires of inflation that the Fed is already worried about. So they don't need to do that. So they won't do that.
That they did it, outside the interest rate moves, which I think would have been catastrophic, like others have mentioned already on the program. But they definitely, they do this day to day, no question, but they did it much more today. And if they continue to do that, what they're effectively doing is providing a benchmark to price these things for the rest of the marketplace.
Well, only if they come in under
Wait, that's not true. That's not true.
Yeah,
they're not providing prices at all because they're not buying these things. They're just doing very short-term repos, using them as collateral. And believe me, they are not taking equity tranches from CDOs as collateral. They're just taking Fannie stuff. They're not taking the unpriceable
Don, by
junk.
taking them at a certain collateralized value, you are giving them a value, and thereby.
But they're not taking the stuff that doesn't trade. They're not taking the stuff that doesn't trade. They're taking the.
Although, Don Luskin, it is possible that this can all be leading into some rate cuts, but we'll come back to that later. Kajino, all right, watch out below. Don Luskin, bull or bear after this week?
See these? These are both hands. This is what you use to buy them.
All right, we're going to come back and drill down. I want to know what these guys want you to buy. Don Luskin. Businesses are so profitable, they have so much cash flow that they're financing their business investment spending out of internally generated funds. And Main Street around the country is working so hard that their wages and incomes are so high, Don. That's the point. Weigh in on that. Does that put you into the bull camp?
Yeah. Totally. You've got this thing diagnosed absolutely right. And the way I would put it is that this whole subprime mortgage, CDO catastrophe on Wall Street is a very contained, microscopic, inside baseball, endogenous problem that's unique to Wall Street. And so all the guests on the show and all the commentators on CNBC and all the writers for the Wall Street Journal, they all panic about it because they live in that world. It's just like if you live in New Orleans and Hurricane Katrina strikes, it's a terrible disaster for you personally, but it doesn't change the whole world. What you're talking about is the whole world. It's working men and women, very profitable corporations. That's what keeps this economy going.
See, I think...
as you said today, that's what's going to bail out Wall Street.
That's what I think. I actually am coming around to say that steady, sturdy Main Street economic people all around the country, even leveraging the global economic boom, are actually wiser and will wind up bailing out some manic Wall Street people.
That's absolutely right. Now, you could say that this problem started on Main Street with a few subprime defaults and delinquencies and infected Wall Street, but it is now a Wall Street problem. It's time for cooler heads to prevail. There aren't any of those on Wall Street.
You're going to be long next week? Don, you're going to be long next week? You playing this in the long side? Or?
Oh, absolutely. Yeah, absolutely. The bottom is in. This is the buying opportunity of a lifetime. The bottom is in.
Well put. Very brave. Don Luskin.